Yo, what up, YouTube? It's Ishmael or Pluto, whatever you know me as. I'm making this video for anybody who doesn't know or like wants like a catch up on liquidity trading. I'm gonna be explaining liquidity trading in this video. I'm gonna keep it short though. I'm just gonna show y'all how we execute trades, how we make bank. I'm gonna keep it hella simple. I'm not gonna be like teaching hella. Um, it's mostly for like intermediate traders who've been knowing these terms for like a month now or something, or like a week or whatever. It depends on how fast you learn, to be honest. But I'm gonna be showing y'all how I trade in the Discord. So basically, you know the normal retail strategy where like there's a support level, and then under the support level you get puts, right? And then it just sometimes like it just goes right back up, right? So I'm gonna show you how to be avoiding that, because you shouldn't be retail trading in the first place. I've learned that after 2 to 3 years of trading, bro. Like it took me how long just to learn that. So I'm telling y'all right now, don't be retail trading, bro. That's just not the wave. Like, hold on, I'll show y'all right now. So, let's look at this, right? So stock came down to here. I'm gonna be circling all this for you. So stock came down to here. Uh, this line right here. It went under the line, right? Right here. It went under 401.95. It went down to 401.92 or 90, like 91 ish or whatever. It went down. That's like the whole point, is that it went down, right? And if we're looking at, oh shit, how do I go back to my pointer? All right, if we're looking at how to execute a trade, right? So right now, okay, this is what liquidity trading is. Liquidity is basically like liquidity trading is basically you're trying to buy in whenever banks get in. And what banks do is they push the price below that support level so they can get a better fill, and then they push the market. So like right here, let me erase all this shit. So like yeah, it went under here. Banks pushed this just that little bit down and got the fill a better price to buy in, and then they pushed the market like a motherfucker, bro. Like look at this shit. This was Friday, I'm pretty sure, Thursday or one of them. Yeah, it was Friday. I'm looking at the bottom right here. But I'm gonna show y'all what time we exactly took the trade, why I took the trade, and why banks take the trade as well. But okay, well, banks take them to get a better price, but there's obviously multiple factors of how to get in and why you want to get in, like confirmations, and I'm gonna be going over that too. So basically, you don't look for liquidity sweeps on the 1 minute chart, because like right here would look like this candle's blue candle right here, and this blue candle, this would look like a liquidity sweep. Yet even though it worked, because literally like it boosted up, it's not like those big moves like this that you want to see. So you're gonna be looking on bigger time frames. I say either look on the 3 or the 5 minute. So this is what you're gonna be doing. See, like that blue liquidity sweep, that is not on here. This is not on the 3 minute chart, but it's on this. Like the 3 minute chart has this. So what you want to do is, after you find a spot of liquidity, you want to go back to your 1 minute chart, and you want to find a break of structure. And what's a break of structure, right? A break of structure is after that liquidity sweep, like this scoop right here, right? How it goes under that support level, that this scoop right here. You only want to hop in after the scoop. It comes back down a little bit, and then after it comes back down, that high it just made, like this high right here, after it breaks through this high, that's when you want to buy. And then your stop loss is going to be right here, under, like a little bit under that lower low. That lower low is right here, and this is going to be your stop loss. And then as soon as it breaks this high, you want to get in, and hopefully it goes crazy, which is normally what happens. And then that's what happens right here. So if we're looking at this trade right here, right? This liquidity sweep happened, and then here is the break of structure. So you want to put a line right here. And as it comes down, you're looking for it to break that line. Right here, it did not break that line. And it didn't here either. It was close. It was close right here too, but it didn't break that line. And you don't get in as soon as the line breaks, because like if you look at this candle, like yeah, it broke, but it closed too. It closed above that this level right here. It has to close above 402.19. 402.19, which is right here, has a close above it on the 1 minute chart, and that's when you can hop in. Because if it just wicks up and comes back down, that is not confirmation, especially on a 1 minute chart. You want to be getting in trades that are like as much you want to get as much confirmation as you can in like the slightest possible way, so that you're not looking for the perfect setup that's like bound to not happen. So that way you would be like taking more trades than usual, getting more profit as usual, and like, you know what I mean? Like, you don't want to be looking for a trade that's like impossible to find pretty much. So these little confirmations are what's going to have you set. So it closes above here. You take a long position, right? That's yes, long position. Let's say it closes above here. You hop in right here. You put your stop loss right below this low. I'd say right there. And then I like to do 1.5 as my risk to reward ratio. But I'm not going to lie, I pull out like a little bit. Like I trim, especially if I'm in heavy. I just be trimming my profits on the way up. And that's how I be trading. But if you see this trade right here, I was in up until like right here because I saw this like rundown. I guess I started like emotion trading, or like I wasn't really emotion trading. I was just like I was happy with what I got, so I just fully got out. But, like I really could have rode this all the way up to here or whatever. But I mean, it's whatever. It was a good move. It was a crazy move. I made like, if you're in the premium, you know I made like $1,000 to $2,000 just off of this one trade right here. So we can look at we're gonna look at other examples as well, so don't trip. Like it's like if you don't have it down yet, I am gonna keep this video short, but yeah, liquidity sweep right here, goes up, comes back down, break of structure to the upside, candle closes above this level, you hop in, and this is your stop loss, and it just goes ballistic, bro. Because what banks do is, here, I'll tell you guys exactly what banks want, right? So banks want people to get puts under this level, because this is a level, right? This support level is a level, and they want retail traders that are getting puts to get more puts. Like they're getting puts right here because they expect it to just absolutely dump because it broke a floor, right? It broke a level. All right, my bad, boys. I had to take a sip of water, but I think I was saying we're going over exactly how banks take trades, right? So this is what happens. Banks want retail traders to get puts under this level, and they want to push that price down just a little bit so that they can get a better fill. Because if banks put in hundreds, or not hundreds, like millions of dollars, like let's say a bank puts in like $20 million, it's just going to skyrocket, right? It's just going to skyrocket like this. And that's what they do, but they do it at a lower price. So yeah, like banks could get in, let's say I'm gonna be drawing this out for y'all. So let's say stock comes down to here, goes up, comes back down, and this is the support level right here. Banks could just buy off the support level, but then if they put in $20 million, they would be getting filled over here. They would be getting filled over here, and then the market's gonna dump, or like whatever happens, because like people are eventually, like hell, people are gonna sell because they bought off the support level, and they're not gonna be up. Like banks are gonna be down, because they bought over here and they bought over here, and the sell side is happening. So what they do is they want people to get puts as soon as this support level is broken, right? They want people to get puts. They bring it down. People are just like, hell yeah, I'm up like 2%, 3%. It's going to be a good trade or whatever. Banks buy right there. Banks end up buying right there. And they push that. They push that all the way up to here or whatever. And then what people start doing, people who bought those puts, they start panicking like, dude, it broke above this support level and I'm about to hit my stop loss. Like, I'm just going to sell, or like they hit their stop loss and they sell, right? And that's when the sell side, the short-term sell side happens, when people start selling. And then banks, they get more. They get filled even more around here. And then that's when the market starts pumping just a little bit. Well, because like, you know, they're already bought over here too, so it starts pumping a little over here too. But when the sellers start selling, that brings the market down just a little bit, because every retail trader starts selling, and then the bank gets filled more over here, and this is the break of structure point right here. That's when the short-term sell side happen. So you're gonna be on the 1 minute chart for this. 1 minute. Sorry, my handwriting is ass, but this is the 1 minute chart. And then as soon as this is broken, you want to be looking for that 1 minute candle to close. You have to wait for the candle to close. Don't buy in at the break. All right, because it could wick and then come back down, and then it'll be an L trade, right? You do not want to be losing that money. So let's say your stop loss is right here, under the lower low right here, and then the banks push this all the way for like the next 20 minutes, dude. Just like pushing and pushing. You trim along the way. You look for liquidity zones, like other points of like higher lows or like higher highs, and you just start taking profit at those liquidity zones, right? And that's exactly how you make money. If you lost, the most you lose here is like 20%, depending on like where the break of structure is. And then the most you make is like what? Like you could be making like 200% off that, but like realistically, you'll be making like 60% to 100%. And if you lose 20%, dude. That ain't shit. Like, but that's how you gotta stay out. This is how you stay out of a 9 to 5. Like, this is not like a complete dream or whatever. But if you master this, like at the back of your hand, you can do this shit in your sleep. Like, you'll be like, oh, liquidity sweep. Like, you'll just be eating. Like, this is what I'd be doing. Like, I just be eating Netflix. I just be watching Netflix, like Outer Banks or whatever, and I see a liquidity sweep. I'm just like, all right, I got my notification right here for this break of structure. As soon as it happens, I'm buying calls, and I just wait for it to run up. I set my stop loss. I go about my day. I come back and I'm up hella, or I lose 20%, and it does not even affect me at all. Like, how do I erase drawings? Hold on. All right. Damn, that erases everything. All right, I'm gonna just ignore that for now until the recording is over. But yeah, you bought in right here. The candle closed at this level, right here. You buy in, it goes crazy. All right, let's move on to another one. I'll do 2 more probably, and so before I end the video, because I don't want this shit to be too long. I just want to give y'all a brief idea of what we'd be doing in the premium, and yeah. So if y'all want one-on-ones on how to explain this even more, like premium already gets one-on-ones, just schedule a time, whatever. I'll help y'all out, because I really don't need y'all's money. I charge for my time, because if everyone's asking me for a one-on-one, you know, I'll say yes to some people. I'll say no to some people. It just makes me feel bad, you know. So I only charge for my time, basically. Whatever is time consuming, like I'm making this video for all of you guys, so it really doesn't even matter. Like, this shit's free. But liquidity sweep right here. Bounce off support. Retail traders got calls right here. Retail traders, where's my drawing? Okay, retail traders got calls right here. They made money. There you go. Retail traders made money off that bounce. They got calls. But then they're gonna see, oh, this was 2 points of support, right? 2 points of support, and it broke through. So I'm gonna get puts. And what happens, the market completely reverses, bro. Like, look at this huge-ass move. Like, look. You see how this was a huge-ass move right here? This is a huge-ass move. Like, look at this move. Look at this move. Like, market went absolutely ballistic. That's like 600% right there. You could have made, like, your daddy's life savings off that shit. Like, I'm not even kidding, bro. Like, I swear to God. Like, this method is a cheat code to the market. I'm giving this to y'all for free. Like, this is literally a cheat code, bro. Like, I'm sorry. I'm just hyped to, like, show y'all this, but break of structure right here. It closes above. Okay, hold on. I'm moving too far ahead. I'm not even. That's still too far ahead. I'm gonna start drawing first. All right, here we go. So, market comes down to here. Liquidity sweep, swoop up. It comes up to here, and it bounces off, right? And what did I show y'all down here, right? What did I show y'all down here? The break of structure, liquidity sweep, it bounces off. As soon as it breaks through and it candle closes, you can get in calls. So liquidity sweep, right here, liquidity sweep, bounces down, it goes up, it closes above that level. You what am I trying to say? It closes above that level. You get into calls right here at that candle. Stop loss is right under that lower low. 1.5 times your risk to reward ratio, and there you go. It gets hit. Not a single red candle in sight besides this little candle right here. Not a single red candle until you hit your take profit. Like, look how cracked the strategy is, bro. Like, I'm telling y'all. Like, this could be your take profit 1. Like, you sell 50% of your trade right there, right? This like hurt. Let's zoom out a little, right? Let's move to when, like, bro, shit, what am I even on? Like, this could be your other take profit too. Like, this, okay, look, this is an area of liquidity. This could be a take profit. This could be a take profit. This could be a take profit. And you just, like, unless, like, like, if you have a trailing stop loss and it goes down a certain percent, that's like, that's fine if you get stopped out. Like, I'd say just get off that trade and you're chilling, you're still up. Like, you didn't really lose any money, you just cut some of those gains, you know? But if you're trailing stop loss, like, if you do it properly, it'll literally have you in for all of these. And you'll, like, bro, this method is insane. I'm telling you, I'm putting y'all on free sauce right now. Like, I learned from TJR Trades, and I'm trying to put all of y'all on right now. If you, like, go follow him. He'll be in the description of this video too. Yeah, I'll put you. I'm putting on. Okay. I'm putting y'all on right now. I'm not even gonna cut that out. I deserve that embarrassment. Anyways, all right, let's go back to the 1 minute. I'll do one more before. Like, yeah, this is a liquidity sweep, but, like, I mean, it's a 1 minute chart. That's what I'm saying. Like, this looks like a liquidity sweep. It goes down, break of structure. It doesn't close above. Like, not even no point. There's no point. Plus, it's on the 1 minute chart. I only look on the 3 and the 5 minute chart for liquidity sweeps. All right, let's look down here. There was no break of structure on here besides, like, all the way up here, and that's, like, yeah, it's too stretched out. A break of structure needs to be down here for me, around here, for me to hop in, not all the way up here, because that way I know that, like, I don't know, it's just obvious. If it's, my bad, boys, but if it's, like, too far stretched out, don't hop in. This is perfect. This one's perfect. So, right here, right? Like, see how this break of structure is, like, right here? It's only, like, $1 difference, while that one was, like a 2, like, I don't even know. It just wasn't a big move, if that makes sense. Like, this can't be too much of a liquidity because this is just a scoop, while this is just a huge dump. You know what I mean? That's how we be basing off our liquidity sweeps on. But let's go on the 3 minute chart, see if that's there. I lost my spot. Oh, it's right here. Why did it put me all the way over there? Anyways, that is there. So 3 minute chart, like, you see how what we were looking at was over here? There's literally, like, no liquidity spots right here. Like this is all just consolidation, you know? Like, yeah, shit is not it. But all right, 3 minute chart, liquidity sweep to the or to the upside. So 399.16. Retail traders got puts. Banks got filled at this spot right here. And then let's go over to the 1 minute chart. All right, now I gotta find it again. All right, back on the 1 minute chart. Banks got filled right here. This is break of structure. This is break of structure. You wait. You don't hop in for anything, for any reason at all, until it closes above. This candle closed above. It closed right here. So let's say you hopped in right there. You guys already see what happens. A little under that lower low. 1.5. 1.5. Look. This is all in the span of within. Okay, you would be getting in the trade at 10:11. You'd be out of that trade at 10:25. Like, you just make hella bank in 10 to 15 minutes. I can't even count because my shit does it for me, bro. I don't even know how long that is, but, like, 10:11, 10:25. That's like 15, 20 minutes, right? I don't even know. Anyways, yeah, so candle closes above this level right here. You hop in, you're down maybe like $2, $5 max, depending on how many contracts you're in. Personally, I'd probably be down like $6 or $7 right here. Not even close to the end of my stop loss. Boom. Trade ends. You just made 2K for the day. And that's not even over. That was the first trade of the day. Second trade of the day. If you're doing the same 1.5 times, same amount of contracts, another $2,000. That's $4,000 for the day. And this is also Friday. Third trade of the day. Another $2,000. That's $6,000 for the day. You know how fucking insane this strategy is? Not a single liquidity sweep failed. Not a single one. Maybe like this one down here. Is that even there on the 3-minute? No, it's not. It's not. And even if you took this like swoop liquidity sweep, it didn't even have a break of structure. If you did take it, you'd be up. But like, I don't advise on that. Don't do that shit. Obviously, I'm not a financial advisor, so I don't advise on any of these. But I said I'd keep this video short. I'm sorry. I've just been trying to pump this shit out for you guys, trying to make y'all understand it. Literally cheat code, market cheat code. Use a strat. You'll be rich. Goodbye. Love you guys. Oh yeah. Also, boys, make sure y'all like and subscribe. Share the video to any of your homies that are interested in day trading, or they need help with day trading. Like, just share it anyways, because this is literally the best strat ever. Like, a lot of y'all have strats like, oh, MACD cross, EMA cross. That shit is laggy. Like, the computers are laggy. That human brain is not laggy. So, like you can't trust an EMA, because also, like, banks do not care about that EMA. Your EMA will cross, and if they want the market to dump, they'll make the market dump. So just play with the banks, play along them, do whatever they want, because you'll be making money in the process. Play where the smart money is. Play where the hedge funds are at. Like, play wherever the big money is, and you'll be rich. That's literally it. So yeah, I'm gonna start vlogging too. I'm building a little Batmobile soon, hopefully. So yeah, that was cringe as fuck. I don't know why I said that, but it's like, just stick around for the build. Just stick around for the build. Yeah, make sure you guys subscribe. I gotta turn that notification bell on, because I'll be setting y'all up like this all the time. I'm gonna be uploading like every day, every 2 days or whatever, whenever I get like settled up more, depending on how many views this gets to, how many likes this gets. Yeah, bro. I love all you guys. Have a nice day.